You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and sometimes beyond and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the old OptionsInsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network. If I sound a little bit different, because we're not coming to you from our studio in Chicago. No, we're down the street here, actually back at the Trading Show Chicago here to bring you a whole series of new and interesting guests, including our two next guests. They are both newcomers to the program and indeed to the network. First off, we have Jay Schuren. He is the GM Time Series data scientist over there at Data Robot. And joining him, we have Jimmy Heinz, the equity volatility trader over there at the Gelber Group. Gentlemen, welcome to the network.
Thank you for having us.
Yeah, thanks for having us on.
And as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background, what it is you guys do. Maybe, Jay, we'll start with you.
Perfect. Yeah, my name's Jay Schuren. I'm our general manager over at Data Robot for our time series applications. And really what that means, I'm focusing on forecasting use cases, trying to predict what's the upcoming trading volume in the next period or any real time series quantity, what's the next value going to be, that kind of use case. Data Robot is an automated machine learning company. And what that means, we're competing tens to hundreds of different models against each other to try to figure out which algorithm will work best for your data. We work in all industries and a lot in banking and finance. Yeah, my name.
Interesting. And Jimmy, same question for you, sir.
Yeah, I'm an equity volatility trader. Have been.
I have no idea what that is. No, I'm just kidding. We do a lot of that here on the network, as you might imagine.
Yeah. I have been doing it for 10 years. I started out of college fall of 2008. So I saw the fall of 2008 and then have been trading ever since. Pretty much same product. Top 100 most liquid names, Momo's at the top we trade, and then a variety of other strategies that we've adapted over the past year and a half or so. So, that's kind of my background. I came across Data Robot last year at this conference, and we went through a process that eventually we became the first proprietary trading firm to sign on with them, and it's been a very interesting and insightful past year or so. So,
well, walk us through that. Obviously we have a lot of different vol traders come on the network over the time. Not a lot come with their own data scientists in hand to talk about. So walk us through that process. What excited you about Data Robot? Why you guys decided to work together, and what it is you guys are exactly doing? What are you trading together?
Well, on my side, in February of 2018, we decided as a group. I actually work within a group at Gelber Group called the Carter Group, and that's specifically equity volatility trading. And we decided that we needed to do something with our technology stack. We had too much data, and we kind of got caught offsides in the that SPXY, XIV.
Yes. So, the great vol-ocalypse, Vixmageddon, call it what you will.
Yeah, so I came to the trading show just to be out of curiosity, and came across Data Robot, and it seemed to me, based on the insights that we were finding, metrics we've never looked at before, and how important they are in pricing vol. So we've been able to build exploratory models and find some very, very interesting things, particularly on the time series side. And then actionable models that we are using in practice right now.
So, Jay, let's talk about that a little bit, because obviously, we're used to the kind of the normal inputs people have into a model when trading vol. You have things like the vol of vol realized versus implied. You have the skew. You have the terms. All these other things people look at when they're trading these products. But it sounds like you guys are going a little bit beyond that. So walk us through some of these new inputs you're adding to the model and how that's changing the game a little bit.
Sure. From a high level, we're taking whatever data set in this case, whatever Jimmy would bring to the table. You'd have some data set, and have something he wants to forecast. And what we're going to do within Data Robot is we'll take those inputs and then we'll run and compete many different modeling workflows, so different machine learning approaches, and figure out which one works best and gives you the best performance. But then when we talk about this insights and the exploratory work, it's not just the prediction. We've been investing heavily in generating more trust around these models and ways to see there's some interaction here. This is a key feature. When this condition happens, that drives an outcome. So some more like secondary level of understanding from the models, and that can often give traders a chance to figure out where that might fit in their world.
And what was it like for you coming into this space shortly after, let's say, a somewhat aberrant scenario like last February? Was that a little bit daunting, or was that maybe exciting for a data scientist like you? Like, here's a crazy outlier scenario, but let's kind of get past that and start analyzing and crunching the numbers. What was that like for you walking in right in the heels of all that madness in the space?
Yeah, great question. To be frank, it's a good thing that Jimmy has some patience, because the first round of conversations, like, you guys have your own vocabulary, a whole different language.
It is literally Greek, right?
Yeah, exactly. So it takes a bit of time to come up to speed, especially we would do everything from like hospital staffing to forecasting volume for some execution strategy. So it's across the board. So once we started to get up to speed, the big thing for us that we see in this space, this is a process change. Like Jimmy coming in and starting to try to leverage models to do this, that's really pushing the envelope on what's possible. But that means he's blazing new territory. There's always going to be, whether it's the IT infrastructure stack, that's a challenge to work around, whether it's even internal processes. Like, you're doing something different, and there's always some friction there.
And Jimmy, what were some of those questions that maybe you had to dissuade him of and maybe disabuse him, some preconceived notions, and maybe bring him around to how things actually work in the vol space?
Yeah, there's definitely like a link that needs to be made. But I think, for me, it was actually learning more to their language. How do you identify a problem, and where do you acquire the data? How do you choose the features that you want to put into a data set? Are you going to do a classification problem? Are you going to do a regression problem? And what are you trying to accomplish? That's a learning curve. It's auto machine learning, but it's definitely a process if you're doing it, for the real deal. So learning, the different. I'm a guy who a year and a half ago couldn't do Microsoft Excel. So I've come from there. Now all of a sudden I'm connecting databases and building models. It just goes to show that there is that room for the data scientist demand gap to be filled with people who, have the domain knowledge and have a vision. And it's been, truly incredible to look at, some of the statistics and some of the numbers that we've been able to pull out and then, put into place as well.
So let's walk through a scenario here. You guys obviously have your market-making models and your skew and everything else like that. Maybe you'll feed all that data to the guys here at Data Robot, and they'll crank it away with some of their other maybe proprietary inputs, and they'll come up with some sort of scenario, some sort of predictive solution for the future. Now, will you take that, and will you then put on a prop position based around that? Will you use it to fade your markets a little bit? What is the use case? Walk us through a scenario how this kind of would play out.
Yeah, without getting into too much detail.
We want the exact specifics, all the secret sauce you can give us. All the market makers listening to this, just turn away for a few seconds.
Ken Griffin, cover your ears. We're looking at variance events, so we're looking at, event-driven stuff. And then we're also looking at implied volatility curves. I would say that it's my contention the market-making group making markets in every half strike in Twitter out 6 weeks. There's only a handful of them, and I think that they tend to get lazy after about the top 50 most liquid names and kind of they make markets that are just based on a few inputs and sit on the bid and the offer. So exploring that, and then exploring the heavily concentrated near-term trading, that's just insane. I looked it up yesterday. The SPY traded 17 million Vega in 7 days or less, and Amazon did 9, and then between the two of them total did something like 50. And then you're looking at, it takes 20 names to get to what they did in 7 days. And then names like JP Morgan, Bank of America, Intel, they're under 500,000 average daily Vega per day total. So these are things that, okay, why is that? And how do I build a model, or how do I build a use case and a question and a target to get to some of that? Obviously, that's changed since I've been in the businesses, weeklies and all that stuff.
Do you use it primarily for the single names, or do you find it more applicable there, or do you also use it for, let's say, the SPX and the big indices or the vol products? Is there a particular use case that you find it to be more or less effective? You mentioned Twitter. Is that where the primary use case is, the single name options?
We trade a lot of single names. We trade a lot of ETFs. I would say our most the biggest thing that we've uncovered has been in the SPX. Which trades 185 million Vega a day. So there's something there that's, I think, creating binary volatility that we've uncovered. And by that I mean we're either at 10 VIX or we're at 20. We're nothing in between anymore. So that's huge for our guys to be able to have that, macro umbrella to work underneath and not have to worry about where exactly we are in the volatility regime. So that's been the time series component that we've been really using a lot.
I know, obviously, you guys have been here at the show, but there's been a little bit of vol happening this week as well. We saw, obviously, the trade war premium ratcheting up over the weekend, markets selling off, volatility spiking, actually coming in today, which was kind of surprising. It started off very aggressive, nicely bid, and then by the time we finished some of our morning shows, volatility had already come in and was actually down on the day. So these are these kind of interesting scenarios where I'd imagine, this type of modeling could be handy. Jay, has the recent, tumult in the volatility equity space, has that been interesting to you? Surprising? Has it caused any interesting tweaks to the models? What's it been like the last few weeks for you guys as you're continuing to crunch the numbers and make the predictions?
Yeah, great question. For our side, we're really a supporting role on this kind of stuff. We're always focusing on improving our product, improving the underlying algorithms, and making it easier for guys like Jimmy to find and leverage that stuff incredibly fast. When this kind of event starts to happen, we want him to be able to update his models within the day as opposed to spending the next month trying to catch up. One big thing going back a little bit, Jimmy mentioned his path from Excel all the way to doing this and trying to meet in the middle on the vocab. At Data Robot, we offer a training course that's 2 days. And one of the challenges in a space like this, everybody's busy. No one has time. If you don't learn enough to even have an intelligible conversation, we really can't help each other. And that's something where on Jimmy's side, he put in the work, learned how to do this, and now he's off building all these models without even... He gives us the heads up saying things are going well, but that's about it.
That's actually might be a good name for the course, from Excel to modeling in 2 days, something along those lines.
Yeah, that's the goal.
Can you open up an Excel spreadsheet? Okay, you actually, it's not the first time Excel has come up even at this show. It's surprising how many firms here still rely on the old spreadsheet out there. Well, Jimmy, do you think this is maybe kind of the wave of the future, market-making groups, prop trading groups out there going forward? If they don't now, they're probably going to have some sort of data scientist on their staff or partnering with a firm like Data Robot going forward?
Undoubtedly, yeah. I mean, I think that the industry is already there at the top. I think that discretionary groups, proprietary groups like ours, there's a Gelber initiative to move forward into more data-driven strategies and moving guys into the right place. But, my dad ran Marquette Partners for 25 years. I grew up in the trading business. I know what an evolution looks like because he was part of the electronic trading move. And, I did think for sure that you're going to be behind the eight ball if you don't have something like this, at least on an analysis level. I mean, maybe not actionable models. Maybe you're not trading off of it, but to know that, maybe open, high, low, close vols are the most important thing in pricing a 2-month volatility option, you're not going to get that without a machine learning algorithm. And Data Robot it's great because it's the autopilot. It runs and it gives you models that are good. But then once you learn it, you can really go into it, and then you can start to build ensemble models, which bring 3, 4, 5 different family of models together. And so that's where I think that's where the future is going to be able to see what's going on under the hood. And I think that's crucial right now, in particular, with what's going on in the markets.
It makes sense. It's no secret to say that the market-making, prop trading, liquidity provider space in the options world hasn't exactly been growing in the last few years. It's kind of been trending the other way. So it makes sense that the remaining firms would have to get a little bit more nimble, a little bit more agile, and be able to accommodate more inputs than, back in the day when I first started market making, where you try to go home flat at the end of the day. You had some residual positions, but you weren't out there trying to take a position. Now that has flipped quite a bit. And with the handful of firms that are remaining, they have to be a little bit more agile, which I think gets back to what you guys were talking about here.
It's almost like pre-adapting.
Yes.
You know what I mean? You have to be able to know if you wake up tomorrow and your edge is gone or your trade's not working and you don't have a backup plan or you don't have something you've been working on. I think that's a sign of a trading group that doesn't have longevity. Our trading group has become aware of that, and so we're constantly looking to find new P&L streams and using trying new things. Data Robot's a huge component of that on all sides. So yeah, for sure. I think to be successful right now, you got to be pre-adapting, almost assuming you're not going to be making money with the strategy you got going right now.
And that's where what we're trying to do is we'll compete hundreds of approaches in parallel, leverage a bunch of compute so that we can, instead of, like, you go back a few years, building these models would take months. But when you have to respond, like, your model's not working, you can't wait a month. You can't just tell everybody we're on vacation and sit that out. Like, you have to respond right away. So this level of automation to get that done quickly is paying off.
I'm curious for you, is it kind of a new space for you? Has doing this work over the past year, has it maybe intrigued you about the options and derivative space? Have you started maybe trading on your own personal account now? Is this something that's kind of interests you? Have you been lured to the dark side, so to speak?
I wish. I do a lot with larger banks and have to sign away my rights to do anything fun like this. But I am continually thinking about passing off those accounts to somebody else and getting involved. This is a lot of fun.
Well, there you go. So you have been lured to the dark side. And you guys kind of mentioned you first made the love connection about a year ago at this conference. What brings you here this year? Is it just to kind of catch up with people? You have an announcement. So what brings you to the trading show this year?
From our side, when we first met Jimmy, we were just about to launch our time series product. So this is new to us. And with the success that groups like his are seeing, we wanted to get the word out. So come back to where we started and really see what we can do.
I know, Jimmy, we're letting the cat out of the bag here. All the people are going to know here that Data Robot is the place to go. All the other market makers are going to hear this. They're going to start reaching out here. It's very generous of you to share all the secrets.
I think they already have the secrets. I think they're already using it. I mean, I think that you have like 15 options exchanges right now.
Actually, I hate to break it to you, up to 16. 16. We just came back from the options industry conference, so exchange talk was very top of mind.
16, great. Well, why not? I don't even care what the name of that one is. Just give it a letter. But with the fee schedules and everything, I think that's what's concentrating all the volume towards the near term. Is there's not a lot of position taking. There's a lot of maker-taker. They're taking advantage of that, and they're using machine learning models to do that. There's no doubt about it. I mean, we can see it when we're interacting in the market. They know when we want to come for a spread, or we're trying to buy puts and calls. All of a sudden, we get filled on all the puts. We were out of line somewhere in our surface. So, I mean, I think they're already there. So I wouldn't say Data Robot's our little tool at this point in time, and our little group to try and find just a little niche of edge.
Let me ask you this, too, because you kind of mentioned the exchanges. We did just come off the heels of the big options industry conference last week, so all this kind of conversation was very much de rigueur, how many exchanges, too many exchanges, all that kind of thing, but also a topic we discussed a lot last week with a lot of firms, and I'd be curious to get your thoughts on this, Jimmy. Your neck of the woods, your side of the space, the market-making prop trading side of the space, it has been under pressure of late. There are fewer firms, seems like every year, out there. It's not exactly the growth area of the space. The firms that are left, it's a lot of venues to connect to. The tech costs are high. The barriers to entry are extremely extremely high. The risk is very high. I'm curious what you think we could do as an options industry to really maybe counter that trend a little bit, maybe incent some more firms to get into the space and actually maybe make it a little bit easier for you guys out there providing liquidity day in, day out. What changes would you like to see made that could maybe make things a little bit better for you guys going forward?
It's a good question. It's a tough question. I mean, I've been a part of the options industry for so long that I've just kind of assumed as it progresses that's the natural evolution of it. I certainly don't think adding Monday, Wednesday, Friday SPY options brings retail investors, more retail investors. I think it automates things more.
Oh, you don't like the additional slew of we're effectively heading to daily pretty soon, right?
Yeah. Well, it is daily. I mean, it's almost daily. Yeah. I mean, well, they're fun to play with, but I just don't know if there's going to be a wave of new retail players considering the ETF space. I mean, that's just so easy for people to come in. I mean, when I started, it was about taking advantage of investors that needed single name, risk. Either they needed to sell a call or they needed to buy a put. We were able to identify those anomalies. This doesn't exist anymore, so you got to kind of create your own edge. And you're right. It's tech intensive. It's legally intensive. There's a lot of barriers to entry. So, I mean, I wish I had an answer for you, but I don't know if I do. I mean, what do you think?
It's interesting. This is one of the few areas of the space. Usually people say, hey, we have our niche and we want to keep it to ourselves, stay out of our business. On the market making liquidity providing side, they're always like, hey, I want more competitive. Bring more in. We need more people in this space to kind of help keep these markets tight. And all the Vega you were talking about before, only a handful of firms. How many firms can take all that down on a regular basis, right? You kind of need more players in there. We've seen a lot of storied legacy players like the former Timber Hill with Tom Petterfy getting out of the business. Blair Hall has gotten out of the business. A lot of people have moved on, and for the remaining firms, it is quite challenging. One of the things that was bandied about at the conference a lot, it seems to have the most traction behind it, is strike mitigation. So you're talking about the number of series before and weeklies and things like that, but maybe dialing back so you don't have to quote 900 handles out of the money in some name that's never good. Maybe that would ease the burden. Is that something you guys are intrigued about?
Well, that makes sense to me. I mean, strike selection is kind of a lost art. But I mean, I think that the only reason some of these strikes are listed is to be a liquidity venue and to build a surface that's accurate. So you don't need it. And I think that if you want to do $2.50 strikes or whatever it is, I do think a wider strike price situation would potentially make it a more interesting game. For sure. I mean, moving averages are a huge thing now, Yeah, I mean, strike selection, that would be more fun to play with. I mean, that's what our guys kind of grew up with, I mean, picking where you want to own and where you want the stock to go away from and where you want it to go to.
Well, Jay, might make your job a little bit easier because there would be fewer strikes to have to worry about, at least in the near term. The thought always back in the day was, more strikes, more. That was more was better. More quotes or more advertising for the business. It brings more volume in. It seems like it's starting to tip the balance the other way now. More is not necessarily better. More is more of a burden on you guys in terms of having to quote and provide risk. So, and Jay, it make your job a little bit easier, right? Not to have to analyze as many strikes in series. So it sounds like maybe you're in favor of this change as well.
Yeah, to be frank, it's an area where I'm still learning. So even trying to chime in here, this is more where we're definitely in a supporting role to guys like Jimmy because this stuff is complicated. So trying to take a domain expert who knows what you guys are actually talking about and giving them tools so that they can accelerate that research and build these models quickly. That partnership is really the only way to move forward.
Let me ask you this, too. You mentioned kind of building your own domain expertise. We have a pretty broad audience, people who are deep in the weeds like us, but also people who are coming to this new and they want to maybe check out what's going on in the space and at events like this. What would you say for you, looking back over the past year, as you're learning literally the Greek, right? Learning literally what's going on in this space for the first time. What were some of the interesting things that maybe resonate with you, takeaways, things you learned that, that's surprising. I didn't expect to know that, or maybe I have a better grasp of capital markets now as a result.
Yeah, it's almost embarrassing, but just I think everybody kind of comes to an understanding of how buying and selling stocks, just that simple level. But when you get into the option space, what's possible and how you can make investments, it's really interesting. And trying to think through what strategies can you do as these events in the world happen. I'm excited to start to play with it myself.
I'd imagine from a data perspective, too. I mean, stocks are one thing, but derivatives, an order of magnitude more when it comes to data, right? You have strikes, you have calls and puts, you have months, you have everything else. So just one option series alone on one underlying, like a Google, for example, the data alone it's got to be much more intriguing for you guys than like a single name Delta One, like a stock or something like that.
Yeah, you're forecasting a surface as opposed to just an individual entity. It's pretty interesting.
Yeah, I definitely think that DataRobot's ability to be a support when it comes to the data side, the API side, for me at least, and then on the visualization side, I think the biggest hurdle right now with modeling and machine learning for traders, and I think probably in general, like any CEO, is the interpretability factor. It's tough. I mean, these are very complex algorithms, and it's very hard to give someone a value and tell them, well, here's why it is, because I don't know why it is, but I do know based on how I built the model, and any trader could take an idea that comes from DataRobot and put it on, and it was their idea. So it's really it takes a commitment and buy-in, and once you get that, I think things get rolling. Then there's collaborative efforts that start to figure out, where's there a little pocket of opportunity for us, and I don't think you can do that without a lot of data, on good data analysis and model building.
I could talk vol for hours, but I like to leave our audience with a little bit of a hint, a little bit of a tease, something, leave them wanting more, leave them looking forward to something fun. So maybe if you guys have something up your sleeve, maybe we'll start with you, Jay. A little bit of a hint, a little bit of a tease of what's coming down the pike, what they can expect, what they can look forward to from you guys in the coming months. Now is the time. I guess we'll start with you, Jay. Put you on the hot seat first.
Yeah, absolutely. So in October, we raised about $100 million, so we're really expanding. We're trying to grow in all areas of the company, and a big bet on time series. So the type of work that we're talking about here, it's a huge growth area for the company, and looking forward to what we can do in this space.
So we should expect to be hearing from you DataRobot guys in the options and derivative space more in the coming months?
I hope so.
And Jimmy, same question for you. Obviously, you guys have a lot going on just in the vol space right now. There's a lot to trade, but maybe any teases, any hints of what's coming down the pike from you guys over there at Gelber Group in the coming weeks and months?
Well, we're definitely under a new initiative of growing our traders and our firm into a more cohesive unit. I don't have any quick insights for us because we're just little guys, but I don't know. I think the next 24 hours is going to be really interesting for the market, and that's surprising enough.
That is true.
I think you're looking at anything from I think there could be a Brexit type event tomorrow, based on just a gut feel on how these two parties are working, but we'll see, and that makes it very difficult to position, so that should be a surprise. Our P&L will be a surprise tomorrow. There you go.
Yes. And if you guys, I don't know if you guys are expanding or hiring, but if someone maybe wants to reach out and is curious about coming to work with you guys, maybe on the data side or maybe on the prop trading side or somewhere in between, where should they go? What should they do, Jimmy?
For us, I think there's always a shortage of guys who can code and develop, but with domain knowledge on top of it. So, anybody in college, and in fact, actually, the guy who codes for me is a sophomore at Carnegie Mellon, and he's coming in over the summer to do his second internship. But those type of people are, the smart coding, but pragmatic people, type of candidates. But, don't get me wrong, it's a tough industry right now, and survival of the fittest is going. So if people want to step in, they better be ready to battle. I think, would you agree?
It's definitely the path I took. A lot of people took coming in. You start on the exchange, as a clerk and work your way up. Those paths are mostly gone. It's right into the fire now. And you're right, you have to have a lot of top of the trading expertise. You have to have the coding and developing as well. So if they meet those requirements, is there a website? Where should they go to reach out to you guys?
Gelber has a careers website, and they're on LinkedIn. And I think a lot of times firms will list a job opening that's more of just we're looking for talent than it is we're looking for this specific person that is described in this role. So if you're interested and you think you have a skill set that's the firm's worth looking at, I would find the closest appropriate role that's available and apply that way.
And that's just Gelber Group, Gelber. Is it gelbergroup.com? Is that their website? Or there we go. Check it out, listeners, for yourselves. And Jay, same question for you. If people are intrigued, they want to reach out to Data Robot, maybe they want to learn more, maybe they want to avail themselves of your services, where should they go? What should they do?
Yeah, go right over to datarobot.com, and we've got a career page. We're growing. We're in 15 countries now, but we're looking all over the map. So if you have a interest in data science and want to be part of a growing company, check it out.
There you go. Well, gentlemen, thanks for joining me here at the Trader Show Chicago. I should say so many conferences. They all start to blend together after a while. At the Trading Show Chicago, and we'll look forward to seeing how all of these different initiatives you mentioned, how they all play out in the marketplace in the coming months.
Thanks, Mark.
Thank you.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.